I do believe that Bitcoin is going to outperform every major equity index, every major hedge fund, every major venture capital fund, and every major private equity fund for the next 5 to 10 years over that time span. And I think realistically, most people are going to most people on the street, maybe not listeners to this podcast, but like most people on the street are going to completely fumble that opportunity, miss out on a generational wealth opportunity for the following reasons: underexposure, overexposure, panic selling when the greed and fear index tilts towards fear, and holding the wrong altcoin instead of Bitcoin. And when other people are fumbling, it's an opportunity for the 1000X podcast listeners to make a decent profit.
This episode is brought to you by Kraken OTC. Get access to 24/7 trading services for high net worth individuals and institutional clients to execute orders over $50,000. You'll hear more about them later in the show. As always, investments in blockchain technology involve risk, terms, and conditions apply.
All right, guys, welcome back to another 1000X podcast. It's been an extremely eventful week. I mean, just so much going on. We got Pump Fun ICO came out. We have the Plasma ICO. I saw so many headlines about stablecoin integrations as well. This week we have the USD, or sorry, the Circle IPO, which 4x, 5x, 4x.
It's crazy.
It's just been it's been insane. Bitcoin's back
flirting with all-time highs.
Yeah, Bitcoin's back flirting with all-time highs. Things are looking great. I mean, honestly, it really does feel, last cycle we had the joke of the Suzu super cycle.
the Super cycle? Yeah.
The super cycle. And that obviously wasn't true. But this is starting to feel like might be a super cycle, Jonah. Like, this is finally genuinely happening. I mean, crypto is going fully mainstream.
It's insane.
It is now effectively fully mainstream. Now it's just about following through on integrations. It's kind of insane.
Yeah. Like Pete Rizzo, another Blockworks podcaster, tweeted out this thing where it's a video of the White House crypto director saying that the Trump administration will soon announce plans to accumulate more Bitcoin for the strategic Bitcoin reserve, which is bananas. Like that is the most bullish possible thing that could happen is the United States government accumulating BTC. Almost feels like we're obviously crypto natives. We're sitting here geeking out in the weeds every week, podcasting about crypto. So it feels a little weird to be euphoric about it, but because, obviously we would be, we're not exactly the most unbiased people in the world when it comes to crypto, but just talking to people in my personal life who have nothing to do with crypto, like investing in Bitcoin, even amongst the people who were the biggest skeptics long ago, is no longer a question of like, will it get adopted by society or not? Will there be, like, is it even going to catch on? Like, there's no debate anymore. It's caught on. Nobody debates that it's going up. Nobody debates about the fact that it's not going to zero anymore. Like those conversations are just over. And then the follow-up conversation is like, well, okay, so how invested are you? And, people are like, well, I wish I'd realized it earlier. The price is too high. Just sort of all the same excuses that like, it just basically bad traders make. Markets are to a greater extent over a long period of time, like kind of memoryless processes. Like what the price of Bitcoin did between 0 and 107 or 108K is kind of irrelevant to its future. Like this thing, you should just look at it in terms of like where it's going to go next. And I feel like the underinvestment amongst the community of people who have now accepted that it's a proper investment vehicle that serves a purpose in the world, that cash hasn't even begun to flow into Bitcoin. So, it's hard not to get excited about this. I have to temper my expectations though, because I know about my own internal personal bias. But just to finish out this rant, like I tweeted this too, like I do believe that Bitcoin is going to outperform every major equity index, every major hedge fund, every major venture capital fund, and every major private equity fund for the next 5 to 10 years over that time span. And I think realistically, most people are going to most people on the street, maybe not listeners to this podcast, but like most people on the street are going to completely fumble that opportunity, miss out on a generational wealth opportunity for the following reasons: underexposure, overexposure, like working in crypto so that like I feel like you don't really need to work in crypto to just buy Bitcoin. You know, it's not like oil where you need to work at an oil company to trade oil. You just buy crypto. Panic selling when the greed and fear index tilts towards fear, and holding the wrong altcoin instead of Bitcoin for a long period of time. Like I think that's how people will fumble this opportunity. And when other people are fumbling, it's an opportunity for the 1000X podcast listeners to make a decent profit.
I think those are all good. One thing that I will say is the overexposure is probably the biggest loss to listeners. And I think a lot of people get overexposed because they think to themselves, okay, well, if you're worth, and it makes sense, right? Like if you're worth $100,000 and you put all your money into Bitcoin and Bitcoin 3Xs, you're not rich, right? And so the question is, I'm in this industry, I know this is going to happen, how do I get rich? And that's when people turn to altcoins. And that's when people turn to leverage. But the reality is you have to make do with what the market gives you. I do think that a real way to continue to get rich in crypto is to find those underappreciated 10 baggers. I mean, I think Hyperliquid, for example, when we were showing it ridiculously hard, $12 to $15, from $12 to $15 could be a 10 bagger. I think Syrup right now is still a very reasonable 10 bagger. And these opportunities do exist. They are out there and we can find them. And then once you hit them and they massively outperform, just roll them back into Bitcoin, and suddenly you'll find that after 2 years, maybe your $100,000 hasn't gone to 300, maybe it's gone to 1.2 mil, and suddenly you're on your way, right? I think one thing that I will caution against is fatigue. I think especially in this particular environment, it's very easy to get caught up chasing every tiny little new thing that happens and trying to squeeze every tiny little dollar. I think the best thing you can do in an environment like this, where the tailwinds are so undeniably clear, and we're probably just up in the future no matter what. In a year, is just to pick some things and sit in them and follow their developments and make sure you still believe in it, but don't toss around too much, right? If you believe in something. Literally just believe in something.
Yeah, I agree. I mean, I think overtrading is certainly the road to ruin in a market like this. Like there's a guy I knew, kind of a hilarious character. He's an artist. And back in the 2017 ICO craze, he's like, Jonah, you're a professional trader. I wanted to get your take on something. And then he revealed over the course of the subsequent conversations that he had begun like actively trading crypto, like shit coins, ICOs. He was like all over Poloniex and 60 other random exchanges, most of which probably don't exist anymore. And I warned him, I was like, dude, I'm a professional trader. Like I've seen a lot of people flame out in trading. I know exactly how it goes. You're trading too much. You're constantly like today you're interested in Lisk because it's Python for crypto. And yesterday you were interested in, Tezos because it's like, the future of humanity in space. And it's like, whatever it was promising at the time. And it was like, there was no narrative and he was constantly flipping. But like his counter argument to me over the course of that entire boom was like, my P&L is growing. Like I'm up, like what I'm doing is working. And it's very easy to psychologically lie to yourself as an overtrader, because when the entire space is 100xing and you've 2x'd your money, you can still pretend that what you're doing is working because you've 2x'd your money, even though you probably left 98% of the cash on the table that you would have earned if you'd just been broadly invested in the space and done absolutely nothing other than, well, in this guy's case, paint. So, I think we all got to be honest with ourselves. Like I haven't, just being, completely honest on the podcast, like the smartest thing I did recently was buy Hyperliquid. And I haven't really done much else because I'm afraid of doing stupid stuff. I bought some syrup, probably not enough. But I haven't been like selling things to buy other things or actively trading, just because I've got that tingly feeling that we're going to launch another 50% higher in terms of just like Bitcoin prices, trying to avoid the overtrading hammer that you just described.
Yeah, I think there obviously there's some people that want to sit in front of their screens for 18 hours a day and can figure this stuff out. I think you just have to, generally, this has been true for a very long time, but generally altcoins are trash. Generally long term, they don't actually make you any money. And so in previous cycles, I basically would never have given this advice. Like I would have never given you the advice. And I don't think, I would have never taken the advice. I would have laughed at you if you had told me this. I would have said, dude, the only thing to do is to actively flip and trade. There's no point to doing anything other than flipping and trading. And flipping and trading was making a lot of money back then in 2021. But I'm trying to adapt to a new world where the things that make money outperform and the things that don't make money don't actually particularly do well. This is it's like a genuinely new market environment. Yeah, I mean there are obviously opportunities here and there. I think you can still bet. If something is like extremely heavily shorted and you think there's some good news coming out, yeah, you can take these trades for sure. And don't get me wrong, I think those trades do exist and continue to exist, and there are still inefficiencies in this market for you to take advantage of. It's just not the same as it was 3 years ago. It's not the same market. I mean, in 2021, I was on top of every event, every tiny little thing that was getting launched, because it could send up an asset 15, 20%. You take a trade on that. You have it, you bet on something that other people aren't betting on, and you make good money. Nowadays, it's much more difficult to do this. Requires, I think a lot more skill. Like I would never advocate for a new trader to go be doing this stuff. And not only that, the most important part, there are actual things that you can park your money in.
Yeah,
that
I mean, I think
are good assets that I think will exist in 5 years. In 2021, I don't think there's a single asset I would have confidently told you, yes, this is going to exist in 5 years. This is 100% going to be a top asset in 5 years. It's like I don't think I ever once said that about anything other than Bitcoin. And I did say that about ETH, I think, back then, but that's because before I knew anything, Jonah.
When executing large crypto orders, discretion and efficiency are key. Kraken OTC is built for high net worth individuals and institutions who need deep liquidity, seamless settlement, and 24/7 access to expert traders. Trade via chat or request fast, automated quotes for orders over $50,000. Visit kraken.com/blockworks to learn more. Availability of products may vary by jurisdiction, not investment advice. Crypto trading involves risk of loss and is offered to U.S. customers through Payward Interactive. View legal disclosures at kraken.com/legal/disclosures. WalletConnect is the connectivity network shaping the future of on-chain UX. If you've connected to a Web3 app, you've seen WalletConnect, an icon of trust in crypto, as recognizable as Visa at checkout. From DeFi to NFTs, swaps to staking, WalletConnect is the backbone of connectivity in the on-chain economy, seamlessly bridging wallets, apps, and blockchains. Over 250 million connections and 40 million users worldwide have trusted WalletConnect. And now, with the launch of the WalletConnect token, the network is taking the next step, paving the way for a fully decentralized, permissionless, and community-owned future of connectivity. Want to learn more? Follow at WalletConnect on X and Telegram, or visit walletconnect.network to stay ahead of what's next. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Well, we live and we learn. I mean, you were early on ETH becoming a stable coin. I cut on before the real guillotine dropped. But speaking of overtrading and sitting in front of your screen for 18 hours, It's not an accident that today I'm holding and drinking water out of the FTX 3rd anniversary water bottle by traders for traders that was given out to the conference participants at the conference where you and I met, Avi. This is an artifact of crypto's past and a testament to the group of crypto people who just took meth all day and sat in front of their screens without sleeping doing stuff. Maybe if they hadn't done that, they would have just sat on like basically the most amazing business of all time, a crypto exchange, and sat on early investments in like Anthropic and pretty much every other amazing AI company that Sam somehow invested in, and just ridden the wave. But they didn't. They overtraded their way to ruin and did a bunch of illegal stuff too. So I think, yeah, the lesson for all of us is don't do meth, don't overtrade. And, you know, if you're going to trade, like, you know, don't be a dick for a tick. There are times where like, okay, the market just vaults lower on Trump saying a bunch of stuff that's obviously not going to become policy. You buy that dip. You buy Hyperliquid at 10 or 12 or 15 or wherever we shilled it. You know, on the other side, when the guys from the Sphere in Las Vegas come out and say, hey, WIF is a scam. They never contacted us. Like, just be careful out there. You short WIF, right? Like, there's some trades that pop up where you can make a, you know, a quick 50 to 500%. But you're probably supposed to rate, like to your point, Avi, about not trying to catch the 15 to 20%, you know, coins and just, you know, jump to the next lily pad. Like we probably have to like raise our threshold for what's considered an appropriate return on capital in crypto, and probably lengthen our time frame a little bit from like a few weeks to a few months, because yeah, crypto's starting to grow up weirdly. And I guess speaking of growing up, should we talk about the Circle IPO, which traded like a low market cap shitcoin? Just pumped. It was crazy. What do you think about that?
I mean, it's kind of insane. I think it just tells you everything that you need to know about the appetite out there of investors. And this is we talked about this on a previous podcast. I was trying to explain that there is a whole new class of investor that wants to get access to this market, and we were seeing that in the appetite for these Bitcoin products, these MSTR like competitors. That, hey guys, there are institutional investors out there that have a tremendous appetite in crypto, and they're trying to find all of the right ways to get in. So to me, prior to the Circle IPO, I was pretty damn bullish, because I think that this is just yet another, the way that you can think about it is it's yet another type of product in the crypto world, and there is tremendous demand for products in the crypto world. This product specifically is a stablecoin, get access to stablecoin revenues. And does it actually have to be a good company? No, it just has to kind of fit a market need for exposure, because people are betting, okay, stablecoins are going to 50x their market cap, you know, in the next 10 years. Time to get on board. I think, you know, however Circle is doing now, they're going to do even better in the future, and that's why it's trading for now at a 500%, sorry, at 300% up. Since,
which is just like, I think the reason why it did that,
which is just totally insane. I mean, you know, at a 4x right now, I think that they're probably a bit overvalued. They're trading at a 22 billion market cap. Do you know what the revenues are?
The revenues are 1.6 billion in 2024, and their net income is only 18 million. And I'll tell you why. Like, okay, so first of all, I'm not an equity analyst. It's like basically the one asset class I've never traded professionally in my journeyman career. But so take what I'm saying with a grain of salt. I'm sure there's, you know, financial analysts out there who are far better than me at picking through this. But like, I think that Circle is kind of a crappy business. Like those EBITDA margins are tiny, 18 million on a 1.6 billion. You know, it's like basically 1% margins. And you would ask, how is it that like 16 Italian dudes in Lugano can run Tether as like basically the most profitable business per employee in the history of the world, And these Circle guys generate 1% EBITDA margins. Well, Avi, the reason why is that Circle pays most of their money away, in addition to just like SG&A and random employee compensation and whatever else. They pay most of their money away to like their profits away to companies like Coinbase to feature their product prominently, try to get people to own USDC instead of Tether, and basically fight the losing battle against Tether, because Tether just dominates this stablecoin space. And the other thing that most people even in crypto don't know, and I know this because I worked at a market maker. I'm under NDA, so I can't describe like the specifics of how this contract worked, but just generally speaking, Circle pays the market making community in general a healthy sum of money for every unit of USDC that a market maker mints in general, or they used to it anyway. I don't know what they do anymore, but like that's basically a way of incentivizing market makers to mint more USDC, which increases the float, which increases the yield that Circle can collect. And the reason why that's unsustainable is because that USDC that gets minted, it's not getting minted by an end user to stash. It's getting minted by somebody who's just going to like cycle it through, and then it ends up like kind of getting migrated to Tether or something else. And it's not sticky. So that is an expensive, I think, campaign, and it doesn't really work. I think the Coinbase stuff probably works and sticks, but it's a little stickier, but still not sticky enough. And then the other thing is like rates are about to get cut. As interest rates come down, this revenue is like going to get slashed in a major way. This is not like Apple selling iPhones. This is just hoping that whoever Jerome Powell's successor is who's going to get appointed by Trump, who wants interest rates going to zero, is not going to cut interest rates to zero, which is kind of crazy to me. I don't know. It seems like a terrible company priced by professionals at probably a fair to rich valuation, and then retail degens looking to get exposure to stablecoins just bid it to the moon.
I don't think it's just retail degens. I think it's also the fact that it is people do want exposure. I mean, they want exposure to this narrative, right? And I think we're also going to see this coming out. Probably Ripple's probably going to IPO, and it's probably going to come out an insanely stupid valuation for what it versus what it should be valued at, and it's going to be the same story over and over and over. This does tell me we do have some hype to ride out. That at some point there is going to be a large market correction, probably in these stocks. I'd also probably see a market correction in Robinhood, see a market correction in Coinbase, and the MSTR playbook companies probably have a massive correction at some point. But for now, the appetite is still very clearly there to get access to this stuff. One thing that I do like to do is I'll go on Reddit, and I'll like try to get a pulse for the average degen trader on like the stock subreddit or Wall Street Bets, and a lot of them, what was kind of interesting is a lot of them were talking about how Circle, it's like, oh well, seems like they don't make a lot of money, but BlackRock bought 10%, they took 10% of the IPO, right? And so okay, well if BlackRock really likes it, like we got to get in. And so I think it's a combination. It's the degen investors definitely coming on, but it is BlackRock did actually take 10%, right? So it's like, okay, well, clearly there's some interest from their clients and base there, right? And those people are much. I mean, a substantial proportion are probably degens, but much less likely to be degenerate than compared to your average person on the street, right?
Yeah, that's fair. I mean, BlackRock took it at the IPO price, but like BlackRock being BlackRock, it's kind of hard to deploy $11.5 trillion of assets. And I know they're into crypto, so it's kind of like you don't have a lot of options if you're BlackRock. They kind of take a ton of every IPO, don't they? I don't know. I'm not an expert, but like, to be fair to the degens on Wall Street Bets Reddit, like it's probably better that BlackRock is in for more than they usually are in this IPO rather than just like underallocated, because it shows that BlackRock cares about crypto, that they're picking a winner, or they're at least picking something that's safe from a regulatory perspective, right? They're picking Circle. Maybe Tether is the Cantor Fitzgerald bucket shop coin, and USDC is like the white shoe firm coin. Maybe that's how this is going to shake out. So perhaps it's like justified. I just still think that Circle is such a terrible company that even if it 10x's from here, I still wouldn't touch it personally. The stock.
Well, I mean, especially with 10x's from here. I'm not
yeah, exactly.
Next price, but yeah, I mean, I do think that there's money to be made from kind of identifying these trends early and figuring out, okay, well, if this is what they're interested in, if they're interested in just getting exposure to crypto, like what out there gives good exposure to crypto that they can buy. That's why I'm still very bullish on Robinhood, because Robinhood's making a huge effort to capture a lot of crypto volume and crypto trading, and I do think that there are a lot of very simple improvements that they can make. So I'm still very bullish on Robinhood. Still own that.
What are they doing to onboard crypto users?
Well, they're massively expanding. They're massively expanding the coins that they're offering. I think they're going to be running a lot of integration soon. Their wallet's going to become a lot better. So I think in the next year, you're probably going to be able to interact with crypto through their wallet, which would be amazing.
That would be crazy.
And also the guys basically they keep talking about it, right? Like it's clear that they're making a lot of money on this, and they're just going to keep leaning into it. Just let's get every crypto on here, and let's lower the cost. I mean, the costs are kind of annoying. Like if you're a professional trader, you're not going to want to use Robinhood, because you're going to end up getting a lot less crypto for your money because the fees are going to be high, right? Like you'd much rather get on Binance.
They do a good job competing market makers for bid ask. Like I remember quoting them, we would basically make zero, but the fee that Robinhood takes at the time was like 35 bips. I don't know if they've lowered it, but 35 bips on gazillions of volume, like it probably adds up pretty quick for them. They have 12 million users. It's like an interesting user base, because I doubt boomers like me have, like, I don't have a Robinhood account. But my 22-year-old brother-in-law, basically he was like, hey, Jonah, can I, what do I do? I just got my first job. Like, how do I invest money? And I was like, you should be X% SPY, Y% BTC, and Z% liquidity, right? At your age. And, he's like, okay, well, how do I do that? I'm like, well, just get Robinhood. Like it's the one-stop shop for people who don't know what they're doing. So I would bet that like the Gen Z cohort is just massively involved in Robinhood. And if they make crypto easier for that cohort, that's the cohort that like grew up online during COVID. They're probably gonna trade like crazy. So yeah, I agree. If they get more coins in there and popularize it, that could be a pretty viral mechanism for the distribution of crypto. So you think, I guess Hood is a good stock. Let me figure out what PE is Hood trading at right now.
Quite high.
Looks like 69. Appropriate. 69.420.
Yeah.
So
it's high, but I mean, if crypto keeps going the way that it is, I mean, hey,
not
look,
that high.
It's better. It's better. Well, I think Hyperliquid's better. Syrup is definitely better still. But I think that if crypto grows, it can catch up. It can scale its revenues and scale its profits. Circle, on the other hand, I think it's going to be a lot harder for them to do that.
Same.
When executing large crypto orders, discretion and efficiency are key. Kraken OTC is built for high net worth individuals and institutions who need deep liquidity, seamless settlement, and 24/7 access to expert traders. Trade via chat or request fast, automated quotes for orders over $50,000. Visit kraken.com/blockworks to learn more. Availability of products may vary by jurisdiction. Not investment advice. Crypto trading involves risk of loss and is offered to U.S. customers through Payward Interactive. View legal disclosures at kraken.com/legal/disclosures. WalletConnect is the connectivity network shaping the future of on-chain UX. If you've connected to a Web3 app, you've seen WalletConnect, an icon of trust in crypto, as recognizable as Visa at checkout. From DeFi to NFTs, swaps to staking, WalletConnect is the backbone of connectivity in the on-chain economy, seamlessly bridging wallets, apps, and blockchains. Over 250 million connections and 40 million users worldwide have trusted WalletConnect. And now, with the launch of the WalletConnect token, the network is taking the next step, paving the way for a fully decentralized, permissionless, and community-owned future of connectivity. Want to learn more? Follow at WalletConnect on X and Telegram, or visit walletconnect.network to stay ahead of what's next. As always, investments in blockchain technology involve risk, terms, and conditions apply.
What about so Plasma, our favorite angel investment, has just basically created this extremely complicated launch mechanism for their XPL token. It seems pretty oversubscribed despite the complexities. Is that XPL token gonna roof too, just like the Circle IPO did? Like, I'd rather be exposed to the Tether stablecoin ecosystem than USDC. I don't know. Like, should we talk about that, or what do you think?
Yeah, I think that people underestimate the amount of headway that Tether has made in terms of smoothing over all of the previous issues. There's still a lot of people in crypto, and what I will say is that Tether did have issues, right? They were not running their company in the most above board way. Now they're making so much money hand over fist. There's kind of no reason for them not to be an extremely professionally run company at this point. I mean, and kind of do everything by the book. And that's why they're coming to the States. That's why they're meeting with people, Jonah. That's why they're taking, they're probably taking meetings with politicians as we speak right now. It's because they realize the future, and I think USDC also kind of realizes the future, which is why they're, I think it's going to be struggling a bit moving forward. I mean, if you go look at the market cap, like just go take a look at the market cap of USDC. What's it at now? It's at 60 billion, and USDT is at 154 billion right now. But the biggest difference, actually, let me just share my screen real quick, so that you guys can see.
People love it when you share your screen.
We'll take a look at the last year. Since the beginning, at the beginning of the year, there's a good rally in USDC market cap, going up about 10 billion. Basically, since then, it's flatlined. It's not really going anywhere. I mean, since the beginning of February, they've only added 6 billion in market cap. They've added about 10%. Now, if you go to USDT, take a look at this. They're growing massively still, and it's steady, right? It's just steady growth over time, right?
Can you reject the cookies? It looks like I can't see the Tether chart.
Here, can you see?
Yeah, now I can see.
Go to the year. They're continuing to grow. They're obviously much bigger, so they're growing at a slower pace in terms of overall since the beginning of the year. But they're growing at a steady pace, whereas USDC just added a bunch in January and then did not add really anything. These guys just continue to steadily grow. What that tells me is that USDT is getting organic growth, and USDC is kind of getting the, okay, but bunch of people came in here, and then now nobody really wants to use it anymore.
And even the bunch of people coming in,
3 months of nothing.
Yeah, that's not good. And the bunch of people coming in January is like pimple on a flea's tuchus on the Tether chart. It's like
Tether just continues to gain market share and continues to accumulate, and it's because it's just so widespread. I mean, USDC, it just doesn't have the organic usage that Tether does, which is why I'm so excited about Plasma.
Me too. before we pivot to the Plasma XPL conversation, let me just footnote what you just said with the idea that, like, let me just try to steelman USDC for a second. If stablecoins proliferate, even if it turns into like a 90-10 thing where Tether owns 90% of the market and USDC owns 10, their AUM still probably grows from here, because of just the total addressable market of stablecoins being so huge and global. It really is crypto's second best use case behind Bitcoin. And then the other steelman argument for why maybe it's worth being excited about USDC, even if rates come down, is the idea that right now crypto's an emerging market solution, right? Like it's basically a savings account. So stablecoins are an emerging market solution. It's a checking account for people who otherwise wouldn't get banked by like Citi because they live in, you know, some random Pacific island or Africa or whatever. Anyway, that dynamic may not be permanent. Maybe the entire New York and London dollar financial institution ecosystem will pivot from like crappy legacy Swift TradFi rails to USDC. And if that happens, then, you know, maybe Circle's 18 million worth of profits will become a few billion, and there's a big party over at Jeremy Allaire's house. I don't know. Feels kind of.
I think that's, you know, it's good. There's a good argument, a much better argument a year ago, right?
Yeah.
And now I think that there's going to be a lot less stigma around adopting Tether. I would wager in the next year we see some uptake of Tether from, you know, real financial institutions.
Yeah, I agree.
And that would, you know, that would really just blow the gates open.
Oh, dude. So what does XPL do? It launches, you have to like deposit stables to get units, and then you can, however many units they give you, then you can buy XPL with more stables up to the ceiling defined by your amount of units. And then your XPL theoretically roofs, even though it's just a governance token, because people want XPL because they want stablecoin exposure. But I don't know. I'm a little bit unsure of this one, Avi. What do you think happens to XPL? It's basically the Tether IPO. This is what this is, right? But it's public and decentralized on Kobe's platform.
Yeah, I mean, I think that's basically what's happening is that, you know, they're you know, the blockchain built specifically for stablecoins. The token itself is, I think, yeah, it's, you know, it's like the staking token, right? Like you use it to quote unquote secure the network. I don't know, you know, whether that gets whether that's real value, but what is real value is that there's probably some level of fee that they will be able to take on every transaction, using a stablecoin, and maybe in the future they'll be able to pay that out to token holders. Who knows? You know, if they do manage to capture, like if they do become the network for stablecoins, that would be pretty damn amazing. And I think that they could figure out ways to generate a ton of fees. I know they have a close relationship with Tether, and I do think that stablecoins will benefit from having a dedicated network, especially, you know, as a payment network, right? Because that's a little bit of where I think the world of traditional finance will have a little bit of a problem. Is how do you adopt a payment network that also contains all of your competitors on it, right? Wouldn't you rather adopt a payment network where you can't go use all of the applications on Ethereum and Solana? I don't know, just thinking off the top of my head. So I do think that there's some you know, incentive there for traditional institutions to uptake this. I also do think that it's just a good experiment. You know, obviously, and I invested as an experimentator. You know, I'm not sitting here telling you that this thing is absolutely 100% going to become the world, but I'm saying I think it's good to try it out.
I think so too. I want to actually ask you a question and stress test a framework that I've got in my mind. It's a really dumb one, but it's a framework for experimentation. The framework is as follows. if the token or the project has an FTV that's below $1 billion and it looks promising, then it's probably worth a yo, even if the token itself is kind of like, oh, we don't even secure the plasma network with XPL. We secure the bridge between Bitcoin and the plasma. Like it's all a bit woo hand wavy, but whatever, right? Like it's $500 million of FTV for what could potentially be the world's biggest stablecoin, like Rails. You're on mute.
Yeah, I'll throw in the caveat of depends on the scope of the project. If it's we are a coin for hamster racing, then maybe 500 million is a bit too rich. But
Yeah.
if it's if it's effectively, if it's not a pump.fun coin, then yeah, I mean, I think if it has a real team behind it, if they're genuinely trying to tackle like a large problem that everyone agrees, okay, yeah, this is, or at least we agree with the team. If everyone agrees, then maybe not, but we agree with the team that it's a big problem, then yeah, I think it's very reasonable to take a yo at these things.
Okay, so I'm glad I asked you. So now we have the 1000x podcast framework for maybe 10xing an investment or more. It's twofold. One, is the FTV below $1 billion? Two, does the project have a potential real world use case? It's surprising how few of these tokens do, but I think XPL, for all of its head scratching attributes, does actually meet that the requirements of that framework. It's a yes on both of those. We were talking about the framework
over the actual raise.
What was the controversy
itself? That it filled, maybe not controversy, but it filled in 45 seconds, and people could deposit up to $50 million a wallet. And so I think a lot of people got very upset that they didn't get in. But I think that's always the case for these hyped IPOs. ICOs is like, oh, if you didn't get in, then you hate it. If you got in, then you love it.
Yeah, exactly. We should it launched on Kobe's platform. For some reason I thought he was just done with crypto, but I guess he created Echo, and it's all this whole Tether thing is very above board. They decentralized it. They launched it on a third-party platform. You have to do AML KYC. Like, I kind of like this. It feels like, they're trying to build for the long term here, even though, obviously there's some question marks.
Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com, or hit the link in the description of today's episode to check out their latest wallets. As always, investments in blockchain technology involve risk, terms, and conditions apply.
What else, Jonah? What else is going on in the world of crypto? The pump.fun sale.
Oh,
has been insane. $1 billion raised. Jonah, what would you do with that money? If you were the CEO of pump.fun, what are you doing with that money?
You just asked me two different questions. What would I do with it, and what would the CEO of pump.fun do with it?
If you were you yourself, the CEO of pump.fun, what would you do with that money? I don't mean you, because I know you would blow it on hookers and booze, but
I'm a good person, so I would try to use that money to build a real business. If I were a bad person, one thing, just, I live in America now. Side note, this country can relieve you of any amount of money. It's crazy. Like when you're living in, I guess I spent plenty of my life in France. Like you try to like tip somebody there, and they'll just look at you like you're an extraterrestrial and turn you down. No, I won't have that extra euro. It's weird. Why are you trying to give it to me? Here in America, like you could you could blow $1 billion and like, I bet you could get rid of that in a month if you wanted to, with bad investments and partying and all sorts of stupid stuff. But back to your question, I think what Pump.Fund should do with that billion is try to create basically what LaunchCoin has done. Like, try to create a launch pad where people can raise basically funding equity quickly for projects, link KPIs to the equity, try to add more bells and whistles and knobs and toggles and stuff, so that, rather than hiring a bunch of lawyers to draft a 120-page convertible note safe agreement to raise private equity for your project or venture capital, you can just do it in a few clicks, and make it a little bit more configurable than the original Pump platform. And then they keep their same bonding curve and trading fee mechanism. What I think they're going to do with it, I think they're going to fall far short of that. And I think what happens next with their token, it's not just going to impact their token. It's going to impact Solana too, and potentially a few other ecosystems. So I'm kind of scratching my head. Like, Solana feels a lot riskier now, and I can't quite articulate why.
Yeah, that's an interesting statement. Why does Solana feel so risky to you? I think it definitely feels a little bit risky to me from the perspective of anything that gets big will eventually want to be its own chain, which has always been a problem. That's just always been, a fear. I just don't think it's really materialized itself for a while, because we haven't had massive projects. Like, we just haven't had that many massive projects that then pivot to their own chain. But this kind of reminds me, like, this specific problem of anything that gets so big will eventually want to kind of run out there and tackle the world itself, and not rely on infrastructure. That's kind of what you're seeing with Plasma. It's like, you have a relationship with USDT, and you're like, okay, well, if I can go build this chain, and the USDT founders have a big stake in it, and they bring a lot of value to it, then obviously that's a lot better than giving away all of your value to all these other chains, especially Tron, which I know that they're probably not psyched that they're giving away so much value to Tron. But it also reminds me of the arguments about ETH, right? It reminds me of back in 2021 when all the L2s were coming out. People were saying, well, L2s are going to cannibalize ETH usage. And everyone was like, well, yeah, I don't know. Let's see how it goes. And then that's actually exactly what happened. It just took 4 years to play out. We could be in the early stages of that for Solana, where people realize, well, why would we give away our value to Solana? Why wouldn't we just go build our own chain now that it's reasonably easy? Like, you use them to build your application, and then you leave. And there's no switching costs. That's the issue, right? It's like, I remember Hasib wrote this really great. He wrote this really great article a while back called "Blockchains Are Cities." Ethereum is New York, and Solana is SF, and they offer the same product, which is a city, but they just offer very different flavors of a city. Like, New York is very different than San Francisco, is very different than Chicago. I think a big issue is that there are no switching costs, and there are no costs to starting your own city anymore. This is not that, by the way, it's a great article. I think you did a great job articulating it. This was also before, and I'm saying this with like 6 years of now new experience on this. I always thought it was an interesting concept that I think now is kind of coming under fire.
That's a really interesting point you make. I'm stewing on it now. I mean, I think one other old article that I think still carries a lot of water is the FAT protocol thesis, which is that most of the value goes to basically the L1 and not the application layer built on top of it. So every application understanding this is like, well, why would I'm the incentive structure that I live in is such that I get most of the value if I become the base layer, the main net, rather than the application layer on top that just bleeds all of the value I create back to the creators of the L1 on top of which I sit. So basically, yeah, everybody's incentivized to become their own L1. Maybe that's what Pump should have done. It's just like, hey, be your own L1. Like, we'll be your launch pad. We'll be a configurable product that allows you to launch that at a lower cost. And maybe that would be a real business. And then they could do token buybacks like Hyperliquid. It doesn't feel like they're doing that though. But anyway, just back to the broader point, like even our our friend and fellow podcaster Santiago Roel Santos has decided, I'm going to launch a private equity firm that swaps out legacy expensive infra in Latin America for super efficient, lower cost crypto infra. Very good concept, but like that's a private equity firm that could sit on top of Solana or whatever. Instead, he's launched his own L1, like just classic example of people migrating away from the opportunity to launch on an existing L1. And there's always like a thesis like, oh, we need to do this because the Solana chain doesn't do like 1% of it isn't perfectly tailored to our needs, but it's not true. It's just about value capture.
It is about value capture, but honestly, that's okay.
Yeah,
that's fine. That's fine.
Capitalism.
I just personally think that it's going to be. This is why every time that we talk about something, Jonah, we talk about applications. Like every product that we bring up to you, that we say, hey, go take a look at this thing. We think it's cool. It's an application. It's not. I'm not bullish on chains so much anymore. I think the age of infrastructure, of buying infrastructure, has sort of played out, and the age of applications has dawned on us. As much as we were sort of being boiled like a frog in water. We didn't even realize that it was happening, but here we are.
I mean, Hyperliquid is a product and a chain, so I guess
it's basically first, always product first.
Product first. So maybe we're entering this like app chain world that was forecast by Cosmos, except Cosmos was just kind of like too early. And they didn't really have the right tokenomics
and bad infrastructure.
Yeah. Man.
Anyway, Jonah,
makes investing a little bit harder, doesn't it, Avi?
It does, but that's why we're here for you.
So should we pitch out of our Solana here? I'm thinking about it. Maybe, one pair I've been watching pretty closely is Hype Sol. Obviously,
I haven't owned Solana in a very long time, Jonah.
I still own some.
To be completely clear, like I just don't think it's the best. I just don't think it's going to perform the best from now on.
It's
I'd much rather have my assets elsewhere. Let's put it like that.
Same. Sadly, I love Solana, but like Pump becoming its own chain, Hype. Like Solana was supposed to be the NASDAQ of crypto. Now Hyperliquid is the NASDAQ of crypto. Look, I love Solana. I think it's probably still going to go up a lot, but maybe I should have sold all my bags when Trump coin launched on it and it went to 290 or 280 or whatever. Missed opportunity.
Reasonable take.
Oh well. On that note, I'm gonna go vomit in the sink. What are you gonna do now, Avi?
I got to go clean up my wallet.
Sounds good.
So that's my plan for the rest of the day.
You're going to convert everything to USDC on Arbitrum, and
exactly, and go buy the 1000x token.
Yeah, exactly. LOL. Expecting chat functionality in less than 3 weeks on that one. Hopefully 2. Inside of our terminal. All right, dude. Great talking to you.
It's great talking to you too.
See you next week.
See ya.
Nothing said on the 1000x podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.